The simple but fun video game aims to make financial literacy adoption increase. So according to its creators, it's a game called Get the Bag. It involves players helping a polar bear named Freddy navigates a number of essential financial management topics, including budgeting and investing. The interactive game is developed by a finance platform called Neon Money Club. They actually had a Valentine's Day credit-focused app earlier this year. Matilda Adefalujo is a research analyst with Meristem Securities, and she joins us to talk about financial literacy. Before we play the game, Matilda, good morning to you. Thank you so much for joining us. I guess we can start with you giving us a take on the importance of financial literacy to a broader, wider economy.
Right. So financial literacy basically is important in any economy, right? And it's basically is about, ensuring that people have the information, even the knowledge, to take them from where they currently are to where they're supposed to be financially.
Aha.
Right?
Okay,
so it's also, just like you mentioned, it's a benchmark. it leads into financial inclusion, right? Because without financial literacy, we cannot achieve financial inclusion, in an economy. And on the broader scale, you're looking at the financial system, right? We have the demand side and the supply side. And then there is also the demand and supply of capital, right? Now, when we have demand of capital, but there is not, we don't have that supply of capital, right? Maybe there are some people that maybe are disenfranchised for whatever reason. So that we are going to see that lag, shortage, and we need financial literacy to get us out of that gap, right? Yes, to bridge the gap.
Now, I would imagine that the banking sector wants more financially literate people.
That's right.
Because then they get to charge fees for more of their services. So how would you see the importance of a literate population for that population's banking sector?
So for the banking sector, the banking sector has, for banks generally, they have two main income lines. We have the interest income and the non-interest income. So for the non-interest income, we have fees and commission income, and for interest income, we have interest on loans and advances. Now, when we are able to bridge that, gap and bank the unbanked, right? So we now have access to a larger customer base. That's for banks now, and they're able to better tailor their activities and their services to these guys. And also, we are able to see in the banking sector higher deposits, right? And usually at a lower cost, because it's expected that they will be able to strategize and also increase their CASA mix, that's their current account and savings account, to ensure that they do not spend so much on receiving deposits. And also this would help them to also gain on loans and advances, advance more loans, credits into the wider economy.
Now, since it's our eye on tech, what about technology as an enabler to, deliver more financial literacy or improve knowledge, as this video game we're about to get to in a moment? Yeah. What about tech? What do you make of tech as an enabler of that?
Yeah, basically, tech is life, I would say, right? We are gradually moving into that, we already are into that world where tech is everything. And I would make reference to last year, Q1 2022 last year, where there was cash crunch, and it seemed like there was no money, no access, and then the fact that, the rise of some fintechs, it's opened our eyes to the essence of, technology, fintech in this case. People needed access to faster credits, convenience and all of that. And that is where we are seeing tech take us right now.
Fantastic. All right, we're going to try this. See, other people talk about financial literacy. We actually play video games to try to help people. All right, let's see. So let me describe this to the viewer. So the polar bear Freddy, he has to jump over certain financial hurdles, right? Okay, let's do it. So he's going to jump over this credit thing as a hurdle there. All right, we're actually playing this live, ladies and gentlemen. He jumps again. Okay, here's a question. Now, Okay, maybe do you want to go first or should I go first? Okay, answer a money question to go faster. What is a fractional share? A stock that you share ownership of with friends. B, the equation needed to find value of a company. C, a piece of a whole share of stock in a company, usually valued at the amount you paid for it, e.g. price of one share equals 100, but you buy a piece for $20 and now you own 20%. Is it A, B, or C? I'm going with C. Let's click on C. Are we right? C is correct. Yay! All right, continue. All right, let's see. He jumps again, and I think he gets faster as he goes on. All right, he jumps over another hurdle. I think a question. All right, here's another question. No, this is the same. Why should I ask us the same question? Okay, let's click on C again. You should ask us a different question. We tested this thing out. Okay, now he's getting faster. I think we'll get a second one. All right, he's moving. Okay, he jumps over another hurdle. And they better ask us a different question. Okay, here we go. All right, what is an ETF? And viewers, I should ask my viewers, because I talk about ETFs a lot on the Global Business Report. They should be able to answer this question about a new crypto token, A. B, a fund containing a basket of stocks that lets you invest in a multiplier rather than buying just one at a time. And then C, a short-length album. I like that one. Are we going with B?
Are you taking that one?
Okay, it's my turn, right?
Yes,
okay, so you answered the first one. Okay, I'm going with B.
B.
I better be right, because I talk about ETFs a lot. So, okay, correct. All right, let's do one more.
Yeah.
Okay, he jumps. So you see, you can notice his game a lot faster now, right? Okay, another hurdle. He keeps going. Jump again. And he keeps going. All right. What's another name for a stock? A share, bread, or a chip? What's the answer?
Share, please.
It's a share, right? All right, A is a share. Boom. All right, we got that correct. Okay, should we? Oh, let's do one more. Just one more. So we're two for two. All right, he's moving. Yeah, he's getting really fast now. He's getting really fast. He's gonna jump over another one, and he's gonna jump over another. Okay. All right, this is mine now.
Okay.
What are the benefits of long-term investing? A, there aren't any benefits. You should tell as soon as you should sell your stock as soon as you have gains. B, allows the investor to avoid paying high capital gains taxes. C, selling a stock early based on how you feel about its long-term potential. I'm gonna go with B for the US. I'm gonna go with B. B. Hey, right. Great stuff. Great stuff. So look. Fun game, a lot of folks can check it out. Going back to the matter of, I guess, financial inclusion. Before we even get to that, what do you make of what we've just done? Using a video game to make this kind of stuff engaging.
Yeah, right. So it makes it more interactive. I mean, just like we just had, makes it more interactive, and I'm better able to retain all of these things that we just learned. Now I know that. It's not cheap and it's not bread, right? I know that it's shares, right? So I'm better able to relate with it, better able to also keep it and retain it. And I'm sure that whenever I see it, and I'm sure the viewers too, when they see it after now, they would remember that, oh, during this gaming exercise, it becomes a part of them.
I think that's what I'm going to start doing. For the Global Business Report, we're just going to play video games for 1 hour, answering different questions. What about the limitations, though? Because we're talking video games and so on. So what are the limitations we're trying to get this to scale and adoption? Yeah.
So in terms of limitations, this is Nigeria, right?
Yep.
And we have infrastructural issues, gaps, and we also have lack of technical know-how. As much as we want technology to scale and drive us to that level that we want to get, there is the fact that we do not necessarily have the technical know-how that is required of an exercise like this, or a game or platform like this. Yeah. And also, I feel like another thing that could serve as a limiting factor is also funding. Funding is very, very important, and I think we might also need to import capital, and even that's human capital, and also the skills, right? That's we don't necessarily have that, right?
Gotcha. So thank you for that, because we gotta, as much as we're excited and that was fun, there is of course the realistic issue of the now. You do cover the banking sector. I want to go back to the banking sector now, but still on technology. What do you make of the physical footprints of banks as far as bank branches, and do you see, with more electronic banking and so on, do you see those, as far as physical branches, the footprints, do you see that, changing over time, reducing? How do you see that working out?
Okay, so Well, I'll take you back to last year.
Yeah.
When we had the cash crunch. There were so many questions about, this is probably the end of banking, traditional banking as it were in Nigeria. And then I realized that my uncle still wanted to, exactly, he still wanted to use his traditional bank. And I was like, just download this and get things done.
Right.
But like, I do not trust these guys, right? There is concern about
hacking,
there's trust, basically hacking, every cybersecurity issue that you can think of. Network too.
Do you know? Just sorry, just sorry to jump in there, but for our own, for Nigeria, in our own local parlance, when somebody says network, that's not a good thing. It's usually bad. It means that there's a disconnection there. But carry on.
So I believe that. So I'm going to split this into two generations.
Okay.
So for the older generation, those that have the money, the bulk of the money, I do not think that there's going to be like a sway from traditional banks, to using maybe fintechs and all of that. But for the younger generation, we like convenience. No one wants to be stressed. Everyone wants to get things yesterday and all of that. So I think that banks would now then have to re-strategize their models, their operational models, and ensure that there is a synergy between, traditional banking and adopting some of these measures or some of these techniques that are being used by fintechs.
As far as the banks I bank with in Nigeria, they're doing very well with the electronic. I don't like going into branches physically. I prefer to just do everything electronically, and they're doing well. Okay, AI has been the rave. I say the rave, and I'm part of the problem because I talk about it all the time on this show. What do you think? How do you think AI is going to impact banking?
Okay, so I'm actually going to say this from the positive light, right?
Yeah.
So I think that with the adoption of AI in traditional banking, it would actually help to fine-tune services. It would help in ensuring, okay, let's assume there is a bank now, and with AI, I'm able to check, I have the data, right? I'm able to check your credit score. I'm able to check your behavioral patterns. I'm able to check what kind of things you'd rather, get. So even when you come to me, when you approach me as a bank, right, to get credit or loan or any loan facility, it would help me as a bank, know the kind of products to advertise to you. So that is what AI does. There are concerns about whether it's going to, take some jobs and all of that, but I think that it's more positive than negative for the banking sector.
All right. Now, banking stocks in Nigeria, they've been beaten up a little bit. And funny enough, yesterday we had a segment on treasury bills, retail savings bonds. Today is the last day for this June offer for the latest retail savings bond, fixed income and money markets, right? So those rates have been going up. Would you attribute it all to that? Or how do you see what's been happening with the banking index on the NGX?
Okay, so, well, unfortunately, that's been going on.
Yeah.
But, so there is the equities market and the fixed income market, and there is a negative relationship between both markets. So if there is an increase in interest rates, general increase in interest rates, it's positive for the fixed income market and negative for the equities market. And the thing is, banking stocks are the most liquid on the NGX. They are they are mostly liquid. So when you're looking at volume traded, value traded, you would always see at least one banking stock. So they kind of directly mirror what is going on in the equities market. So now with the high interest rates, we're seeing rates for T-bills going as high as 19, 20, 21%. So it means we are seeing more outflow of funds from the equities market into the fixed income market, where you see, T-bills, bonds, and different tools that are being used. Instruments that are being displayed in that market. So yes, so that's also inevitably affecting the banking stocks.
All right, one more before we round off here. How are you viewing the CBN's recapitalization exercise?
So I was going to also add that, initially, because there are concerns about the recapitalization exercise. When it first came out, there were different uproars about whether it was the right time, whether banks would be able to raise the capital and all of that. But I think recapitalization is good in and of itself, right? Look at what happened in 2004. But I think the challenge now is is it actually the right time? Now, this is a period where interest rates are really, really high.
Yeah.
Now, so there are concerns about banks, being able to raise capital. If they are going to raise capital now, they're going to raise it at higher rates.
Right, right.
And also, it's going to affect their valuation,
right,
because with higher discount rates, it will bring down the value of whatever bank that you're valuing at that point in time. So yes, overall, it has a positive impact on the economy eventually, because they have a 2-year program to raise, 2-year period to raise funds, to raise capital. But timing and also investor, their reception of it is also something that, is yet to...
We'll see how it all plays out. Hey,
Yes.
listen, you've made history. You are the first ever guest on the Global Business Report to play a live video game on, so that you can take that with you. It's been a pleasure having you on the show.
You so
Matilda
much,
Adefalujo, who, of course, research analyst at Meristem Securities. Thanks so much for your time. Appreciate it.